Hey everyone, this is DayTraderRockStar, and tonight's video I'm going to actually do a review of some recent trades, go over why they worked out. Again, great education on this video. Also want to go over some new setups that are happening in the market right now. Nice, great high probability setups that are setting up right now, and go over those charts, and make a good announcement that I'll be doing a free webinar on Thursday, and I'll be giving that information out also. And just basically what you're going to be seeing here on these videos, and what you see on all of my videos, are based on a system that I trade, and based on 5 important indicators that I use: stochastics, moving averages, trend lines, chart recognition or pattern recognition, and using certain reversal candlesticks and some support lines. I tie all these together to get a high probability setup in the market. And on those markets, you're going to notice a lot of the similarities in all these charts and why they work. So hopefully you gain some education off of this video. And definitely check out the webinar, which I'll give the information at the end of this video. Again, GNK is Genco Shipping is a trade I took off today. These are just, actually we're going to go over the first trades I took off today. This is the second day into the week, and I took a lot of profits today, just because on the strength of the market and doing what you do as a day trader, or trading as a profession. You want to constantly continue to make your money work for you. So if something moves, you want to take profits and you want to move that money into the next position. That's how I work. I want to constantly make my money work for me. So if I see a high probability setup, I'll get into it. I won't get too greedy on the trade. I'm looking for 1 to 2 points, take that off or scale out, and then move that money into the next position that's setting up, and constantly rotating that money around. GNK was a classic little down trend line here, but you see the stochastics here got oversold, and we held off the recent lows. That was the divergence, and then from there we had a nice move up, and it was an okay trade. I still think there's more upside here, but the stochastics on the momentum indicator that I use, the stochastics got a little overbought, so I just took it off for a nice profit. And if we do see any type of, there's definitely could move up from here. I definitely like this. I still think the GNK and the shippers are really good, but according to my rules, I have an entry criterion, I have an exit criterion. If I stray from either of those, my profit potential and my risk potential goes up, my profit potential comes down. So it's important to be disciplined and patient in the market. If you step outside of those boundaries, then you become more of a gambler. So, and you'll hear me talking about that every day on my show on DayTraderRadio.com. You hear me talking about the importance of having the discipline in the market. All right, so MIR is another trade we took off today. And again, look at this. This is textbook. And I've been using this trade as an example of how important these indicators are, because this stock has been in a year-long downtrend, over a year and 6 months. And if you go out even further, it's 2 years basically. And so I came into the stock last week, into the consolidation, and seeing the stochastics pulling back, actually, seeing the divergence and seeing that downward trend line, the higher low off of the recent low, the stochastics being, getting oversold here is really, and then we had a little consolidation here, and it just took a little time, and then we broke out. Now, I mean, this is such a powerful move on a stock that hasn't moved in a year, that it just proves that the timing is everything, and sticking to your guns is really important. So again, MIR, one of the textbook and classic trades that I took off today. PENN, this is pen game, and I took this one off today, and basically a longer trend line break. I still think there's more upside here. There was a trend line break, didn't fall into categories of five indicator setup. It was more of a just a momentum trade. I liked it up here. I knew we were going to we're breaking out of a long trend line. Once we break those longer trend lines, I wanted to see that follow through, and we got that follow through. We took profits in it. Nothing really exciting about that trade. Again, some of the other trades here, the Cray here. This was a trade, Cray is a chemical company. And this was a stock that was breaking out and pulled back on a secondary offering. It pulled back to the 20-period moving average, but the stochastics pulled back and continued to look good. Wasn't shaken out of this because it held on to my rules rules are that oversold levels and hold in certain areas. The 20 period EMA was a very important level to hold there, and from that level we ran up and broke out to new highs, and I took it off today. Very strong stock, still embedded up here on the stochastics. Probably has some more upside, but I got another great trade. ATHR, took this one off. This one is, I want to bring this one up. This is ATHR because it still looks good. I did take profits in it today because I wanted to take a lot of profits in today's strength before the FOMC minutes came out. This stock has been a long downtrending stock. Again, the stochastic right here, this was a trend line break in the first pullback off of this, and that was the entry off of this. This is really the first retracement here, little reversal candlestick here, and just to move up. So on that move up, took profits into it. Still looks quite good. The stochastics crossed over. I would still consider this one in play, and I think, you know, maybe the next upside is going to be around that 200 period moving average. Either case, I'm out of that. ITRI here is another one that has a similar setup. This was the trend line break, the first retracement, stochastics pulled back, crossed back over, and now ran right up to the 200 period moving average, and we took profits in that. And then one other stock that recently took off, and this is another classic example of here is a positive divergence in the stochastics. You hear a lot of this terminology, and I'll be going over this all on the seminar on Thursday. So if you want to, you know, learn about how to use the stochastics and how to use the downtrend lines and how to spot these consolidation patterns and the higher lows and the chart recognition, well, that's where you're all going to get that information. But BBBB, just again a textbook example of a stochastic divergence, positive stochastic divergence, where you see the stochastics grinding down, but the sideways consolidation in the price level, and from that we take an entry. You know, as we see the consolidation hold here, and the you know, and this little wedge pattern in the stochastics, which I trade a lot, and from there this is an explosive move up and just a great trade and nice profits off that. So really pulling in the money. Now there's some new setups in the market that I want to go over really fast. This is off the 10 for 1,000 watch list, and the 10 for 1,000 watch list again is a watch list that I send out to the members each Sunday that are setting up these setups before they happen. IP is one of these setups, and I'm going to throw it out a couple freebies tonight. IP is still in a downward wedge pattern, and we pushed up against this trend line, and it's not 100% set up because the stochastics are a little overbought here, but the overall downward channel, the wedge pattern here is a very strong channel. So I'd watch the I just watched this level here. I would look for a little consolidation. I do think we're going to get a breakthrough here. So IP, I might get into this one tomorrow. I do think that this one is due for a pop, and the stochastic is probably going to embed up here. So the only problem is, again, we're pushed up against the trend line. We have overbought stochastics. Normally you would see a pullback here, but because we're in 75% of the pattern completion here, we're going to look for that breakout around this level too. So IP, and again, I know I'm running through this, running through the terminology here. We're talking about the consolidation and the completion percentage on certain patterns, and this, you know, and measured moves, and all this comes into play of, you know, I'll go into more of that in the webinar. TM, Toyota Motors, really like the setup here. I have taken the first position in TM today, well, actually yesterday, and again, this is a stochastic pullback holding off the recent lows, and you know, it's not an exciting stock, but it falls in the criteria of a quality company on the first pullback of a trend line break. I like it here. I think there's definitely upside on TM, so I'm going to throw that one out to you. PBR, added to this stock today, and this has a very interesting trade to it. You see this dotted trend line, not this one right here. I'm going to get rid of that one for a second. But this dotted trend line here, it goes out to this gap, pulls through the highs here, through here, through here, through here. You know, we pretty much tagged this downward trend line, and we're holding off recent lows. Stochastic's got a small little crossover here. Want to get this one back above the, I want to get it back above $35, and I feel very confident in this. I think there's a big upside move coming in PBR, and I think the target right now is going to be around that $38 level, or where that 200 period moving average is. So that's a nice return there, about $3, $3.50. And we do get that pop tomorrow, or the next couple of days. We're going to see that crossover in the stochastics and the momentum to pick back up, and definitely a good shot to the upside. So PBR is definitely going to be on focus tomorrow on the site. Now, you hear me talking about a lot about the plays where the stochastics pull back and the price levels move sideways, and that's called, what I call positive divergence in the stochastics, or positive stochastic divergence setups. And it's one of the important chart patterns that I look for. There's three patterns I really pay attention to: the channel, downward sloping channel, the wedge pattern, the inverted head and shoulders pattern. I also use the stochastic divergence, positive stochastic divergence. So I'm going to give you a couple of examples of those. IMO. This is Imperial Oil, and I just came across this in a scan. I'm like, wow, great wedge pattern here. And how do you tell a wedge pattern is going to break out? There's a couple different ways of seeing that. One is, looking at the percentage of completion of a pattern like this, and wedge patterns usually break out into 75% into the pattern. So at that level, if you're into that level, and you can start to see the stochastics pull back into an oversold level or hold off of recent lows, then you have your entry, and you have to take that entry. You have to believe in your system. You have to believe in your entries. And from that level there, you get that breakout. Now, great, it's good on hindsight looking back, but it works. It's just, I can continue to bring these to you, and you just have to continue to, mark them down, follow them, find your own, send them to me. If you find a good setup in the market, try to keep it as a decent stock. I would love to have a stock that has a, kind of a name to it, not some fly-by-night Chinese pump and dumper, but something a little more substance behind it. And just send it to me, and I'll definitely give you my opinion on that. Starbucks was a good example. I was like talking about Starbucks today, and I decided to look at it. And I was like, wait a second, this was a great example of something I would have got into. It's just, there's so many stocks out there, and sometimes you just don't happen to cover them all. And again, you can see the sideways consolidation holding above the 20-period moving average, and you can see the stochastics at this point pulling back. So at this point, this steep decline in the stochastics and the sideways consolidation here is telling you one thing, that we're going to get a positive push here in the stock price. And that's exactly what happened in Starbucks. And you can see just the aggressive bounce on this when this happened. It's just an explosive move, and it's one of the better patterns, and I love to trade this. If I see this anywhere, and again, GT is a good example of that. You can see this is Goodyear tires. The downward move here in the stochastics, the sideways consolidation here, and the pop from that level. Textbook level. Again, Goodyear tires, a quality stock also. So again, these are some really good examples of that. That type of setup, and that's, I consider that a pattern setup. BIDU is actually setting up like that now, BIDU, and you can see the stochastics pulling back here in BIDU. Market's holding the 20-period moving average. We got Google out on Thursday, and you can see just that level holding here. And I would expect this to, in the next couple of days, to pop out of this and push back up above $100 on BIDU. MLM, this was a recent trade, and it still looks good. Again, you can see the difference here, the stochastic pullback holding the recent lows, and this is exactly what I stick to. When you find something that works and you stick to quality, it continues to play out. And I wouldn't stray from things. Again, if you stray from your entries, you stray from your discipline, you start to gamble, you start to pull away from your risk reward type of setups. These high probability setups work really good. There's no reason to look anywhere else. So MLM was a recent trade out of that position. Took profits into it. Now I'm going to continue to watch it. I still think there's upside on MLM. LLL is a position I want to start taking here. The stochastics have pulled back. We're holding off recent lows, so we're going to look at that one this week. ACM was one I recently took. And it continues to look good. Got into this yesterday. We got a huge pop on it. It held up pretty good. Stochastics have the momentum. This was another example of stochastics divergence. Pullback in the stochastics. Sideways consolidation holding the 20-period moving average and the pop. So I'm going to look for this follow through on ACM tomorrow going into the rest of the week. AMT. And what can we say? This is another scenario where I sent out the alert on this on 10 for 1,000. I said to watch for the pullback, watch for the stochastic pullback, and then in this case we got a nice reversal candlestick, an outside day candle or bullish engulfing pattern. Really looking good. Nice volume. We're going to see some follow through on this AMT tomorrow. We'll see how far we can push the profits, and we'll maybe take some profits in that. And Lockheed Martin, one of my favorites going forward, LMT. Again, sideways, the stochastics pulling back. We actually traded this one off of this level, bounced through, took profits, came back, got back in it here, got a nice little bounce. Now it's holding. I'm still holding my secondary entry on this and looking for that further push up here on Lockheed Martin. So that's it continues to look good, and you're starting to see a pattern in the setups that are just making tremendous money on the site. Again, I'm DayTraderRockStar. I broadcast these setups every day on my show, DayTradingRadio.com, and I try to give you the best education out there. I've been doing this for quite a long time, about 18 years, and I have a passion for teaching. I have a passion for living my dream, and it feels good to be able to show people how to live their dreams. So I hope you enjoy this. I'm going to be doing a webinar this Thursday. Infinity Futures is going to be sponsoring it, so they're going to be using I'm going to be using their platform, but it's going to a free seminar, and basically I'm going to be going over my system, top to bottom, how to all the indicators and everything. So hopefully, if you'd like to come by, I'm going to put the information up on the screen right now. Write down the link, go there, sign up, ask me any questions that you would like, and I would love to see you at the seminar, or webinar, I should say. And this is our future. So I'll see you guys in the market. This is DayTraderRockStar, and here's the information coming up. All right, this is a little page of the webinar. Again, of course, you can't get through this on the video, but I just wanted to give you the correct date here. It's going to be October 14th at 3:30 Central Time, 4:30 Eastern Time. Of course, it's free. Presented by me, John Carisco of Day Trading Radio, and the information going to be covered over here, also known as DayTraderRockStar. I know a lot of people don't know my alias. I must go through my DayTraderRockStar handle. So we're going to go over the stochastics, moving averages, the 20, 50, 200 EMA, when to use each, trend lines, how to trade them, pattern recognition, the best patterns to trade, reversal candlesticks, which one to use, and how to tie it all together for the high probability setups in the market. And I'm going to be using this to show how to trade individual stocks and futures. Now, I use the same criteria trading the S&P E-mini futures. And it's just on a shorter time frame, but everything works out the same exact. The trend lines are very important, pattern recognition, also how to use the tick, and some other patterns in the stochastics and in the tick chart. So here's we'll follow up now, just giving you a link. Maybe I could do a tag link, but you might just have to type this thing out and just go to the site. If not, you could just go to my site, www.daytradingradio.com, and there'll be a link there also. So hope to see you in there. And I'm done for the night. I'll see you guys in the market tomorrow. I'm out.